Hi friends, Professor Joe here. I hope you all are doing great and welcome to this video. In this video, we are going to talk about the psychology of traders, especially why they lose in the stock markets. Psychology plays a very important role. How you plan to enter the markets, what kind of attitude you're coming with in the markets, play an important role whether you're going to be successful in the markets or not. The most dangerous psychology of people who lose in the stock markets are people who come to the stock markets to gamble. Yeah, people say that it is so simple. Stock market is so simple. All I have to do is press a button, whether it's buy or sell. I'll just press a button, and every time I lose a trade, I will double my bet. Somewhere I will win, and then I will become successful. But friends, that is not how the stock market works, because you might lose all your money and still you will continue losing trades, because you cannot just win trades just like that. You need a strategy for it. You can flip a coin 10 times and 10 times it can be heads. You might think that at least once or twice it might be tails. It's not necessary. Every trade is on its own merits. If you are planning to enter into the stock market, or if you're already there in the stock markets, do not use this gambling psychology and hope that you will win in the stock markets. You might win once or twice, but there might be a long streak of losses that can wipe out all your equity. So don't come into the markets with this attitude. The other reason that people lose in the stock markets is because of lack of knowledge. Because of lack of knowledge, they do not know what should be their target goal. So since they don't have the knowledge, they say, I will double my equity, I'll triple my equity in a month or in 2 months. That's not possible. In some cases, yes, it is possible when you take a huge risk of your equity. But if you want to do it in a systematic manner, you need to learn the movement of a particular financial instrument. And then only you will be able to succeed in it. So, lack of knowledge creates lack of goal. And because of that, you do not fix a right goal. And because you do not have the knowledge about the financial instrument, you will lose in the markets. Another reason why traders lose in the stock market is because of revenge trading. Because of gambling attitude, lack of knowledge, the traders enter into wrong trades. Then they feel that, no, how can I be wrong? So now they start entering into trades which are not good trades, trying to trade against the trend, trying to enter into trades where the setup is not ready because of FOMO, fear of missing out. And then what happens? Because of this revenge trading attitude, the traders lose even more money. Normally, at this stage, the traders start saying that stock market is purely luck. Some people win only because they are lucky. Because now these people have this gambling attitude. They are not ready to study. They are not ready to learn. So they have lack of knowledge and then revenge trading. All these three things is basically 3 points of a triangle. And this triangle is a losing triangle. It becomes very difficult for traders to win in the stock market. Another reason for traders to lose in the stock markets is they are not ready to accept small losses. Stock market is a place where there is an ocean of wealth. When you're wrong, agree to that you're wrong and come out of that trade. Now, traders do not agree to this fact because of ego and they start averaging a bad trade. The worst thing about the stock market is it can fall so much down that all your wealth will get over, but that averaging business will not work. It's better you take a small loss and come out of that trade and logically think whether the market is in the right direction where you think your trade is. Again, assumptions. I think that the market will go up from this point. I think that the market will go up from this point. Again, that is very dangerous. People who start thinking always make wrong decisions. You look at the market and see what the market is telling you. The people who are not seeing the markets and not taking the signal from the markets always does assumptions and they keep losing. Another reason why traders lose in the stock market is because of hopping strategies. Now, whenever you finalize a strategy, you check it, you back test it, and you try that strategy with a very small lot size. Like if you can trade one lot, trade with 0.001. micro lot, and test it. I am not a person who would say that you do demo trading, because in demo trading, that feeling does not come. It's like playing a video game. You lose, you start another game. No. Trade in the real account, but trade with a very, very small lot size. This way, you will get an idea whether your strategy is a good strategy or not. And once you are convinced that the strategy is a good strategy, then start risking 0.5% or 1% in each trade and start trading. What is more important in the stock market than being right every time is surviving in the markets. Because if you survive, you will tweak a little bit here and there in your strategies, and eventually you will start making money. So, hopping strategy is not a good idea. Backtest your strategy, get convinced, then only enter the markets. The next is discipline. It is connected with hopping strategies. If you are a disciplined trader, you will make sure you follow your discipline. You will make sure you follow your rules. People do not like to follow rules, especially when it's their own money. Behind the head, they have this thought that this is my money. Who's going to ask me anything? But when you lose it, you lost your own money. So it's very, very important that you be a disciplined trader. Follow the rules. Do not hop strategies and follow your rules, and you will surely become a successful trader. And the last, but not the least, a very, very important reason why traders lose money is risk management. Traders who do not understand their risk appetite will lose the money very, very soon. So understand your risk appetite. If you have invested, say, $10,000 and your risk appetite is $100, then spread that $100 into 5 or 6 trades, so that every time you lose, you still have another 4 or 5 trades to lose that $100. And then eventually you will become successful and come out of it. The traders who do not manage their risk properly blow their accounts in less than 90 days. So these are few of the psychological drawbacks that traders have when they have already entered the market, and that's the reason they lose money. Now, if you're ready to learn these things in the right way, 101% you will become a successful trader. Trading is no magic. Trading is all about strategy, practice, and risk management. So friends, I hope that this little video has made it clear what not to do in the stock markets if you really want to become a successful trader. Keep learning, keep growing, keep getting better every single day. And the only way you can become successful is practice, patience, and persistence in the stock markets. All three are equally important. Now, friends, if you love the way I'm creating these videos, please like and share these videos. And subscribe to my channel if you also love the videos. This way, I feel motivated to make more videos for you. Friends, I have a community of traders and investors called as Masters of Stock Market, where we teach what trading is, what is technical analysis, what is fundamental analysis, and other things related to it, like sectorial analysis, management analysis. But what is most important is we discuss among ourselves that what is the right strategy, what is the right stock, what is the right financial instrument to invest in. We do not give tips, but we discuss. So if you're interested in joining the community, the link is there in the description. Thank you. Namaskar.